Hi everyone, my name is Paul Vojchehoske and welcome to the Real Estate Classroom YouTube channel, where our mission is simple, and that is simply to help you pass your real estate licensing exam the first time. So in today's real estate exam prep video, I want to talk about 4 concepts or 4 reasons why people absolutely love to invest in real estate. And those 4 reasons are appreciation, cash flow, tax shelter, and equity buildup. And I want to discuss each and every one of these very specifically in this video. So let's get to it. So the first reason people love to invest in real estate is because of the appreciation that that asset or that piece of real estate can bring to the investor. Now, appreciation is simply an increase in value of an asset over a certain period of time. And that period of time could be weeks or it can be months or years. Now, in our example here for this video, we're talking about real estate appreciation. So that means an investment property that you've purchased, no matter what kind of real estate it is, whether it's residential, agriculture, commercial, whether it's industrial, it does not matter. We are after the appreciation if we're an investor. So take a look at your screen here, and I kind of have a little mathematical formula here. So if you purchased an investment property for $100,000, let's say 5 years ago. Today, the current market value is $50,000. That means your investment property is appreciated or increased in value in the amount of $50,000. Now, understand that $50,000 represents the appreciation, but that's an unrealized gain. That's what we call it, an unrealized gain, because that $50,000 is not sitting in your bank account. You don't have liquid assets, or it's not a liquid asset that you have access to. So if you wanted to get access to that $50,000, you would have to do something like get a second mortgage or some type of home equity line, or you would have to sell the property, and from the proceeds, you could realize that gain. So remember, appreciation is an unrealized gain. And one of the reasons we love to invest in real estate is because of appreciation. Reason number 2 is called cash flow. Now, cash flow is the net proceeds, or what's left after all expenses are paid. And remember, in real estate, cash flow can be positive or negative. Now, typically 99% of all investors, they want positive cash flow, meaning they have money in the bank from this investment every month after rents are paid and expenses are paid out. But I have seen, in fact, personally, I've worked with a couple investors over the years where they bought an investment property specifically for negative cash flow because of their portfolio that they owned. They needed the tax shelter. Now, we're not going to go in detail at all over that concept. That's for other videos, but I did want you to be aware that that is a possibility. All right, so let's look at our example on your screen here. So let's say you own 123 Main Street and it's a residential apartment building. And the annual income, the gross income or revenue that this building produces is $100,000 per year. Now, your annual expenses is $30,000 a year, and your debt service, which is your mortgage payments, totals $30,000. That means out of that $100,000 in revenue, you're going to spend $60,000 in expenses and debt service, which gives us a positive cash flow of $40,000. That is a realized gain. What does that mean? That means you as the owner, you have 40 grand sitting in your bank account. That is real money. That is earned income that you're going to have to pay taxes on. It's a realized gain. That is another. Now, reason number 3 we love to invest in real estate is the tax shelter. Now, a tax shelter simply means that your investment is structured in a way that you realize a positive benefit against your tax liability, meaning it helps you pay less taxes. That's essentially what a tax shelter is. Now, let me give you an example similar to the previous slide that we had discussed on cash flow, and kind of work through this mathematical problem here so I can illustrate what I'm talking about. Let's say that you own that 123 Main Street, that apartment building, and it produces $100,000 in annual gross income. Let's say that your annual expenses are $50,000 a year and you have debt service, which is your mortgage payments of $30,000. Excuse me. So that means on its face right now, you have a $20,000 positive cash flow. That means you have earned $20,000 or this investment property has produced a profit of $20,000. That $20,000 is in your bank account. You can spend it, but you must also pay taxes on it. That's $20,000 you got to pay state and federal income taxes on. So here is the benefit of investing in real estate. It's called the tax shelter aspect, and I'm going to show you one right here. The IRS requires that if you own real estate as an investment, you must take what's called depreciation. So it's a deduction. They call it depreciation deduction. Now, the amounts that you can deduct is different depending on if it's a residentially zoned property or if it's commercial. And I'm not going to get into the different types of depreciation. I've already done a video on that. And if you want to watch that after this video is done, right up here in the upper right-hand corner is a link to that video. But depreciation is a book loss or a paper loss, but it does impact our realized gains. So let's look at our scenario again that we just looked at. So we have $100,000 annual income. We have annual expenses of $50,000 and $30,000 in mortgage payments. We have $20,000 sitting in the bank that is positive cash flow that we have made off this investment. Right now I have to pay income taxes on it. But the depreciation schedule on this particular investment property means that, or has determined that I can claim $25,000 in depreciation deductions. Now that's a paper loss. It's not an actual loss. So what it does is it turns that $20,000 gain into a $5,000 loss. All right. It's a paper loss, meaning I still have my $20,000 in the bank and I can spend it. But because of this depreciation deduction, because I'm showing now a $5,000 loss, I'm not going to pay income tax on that $20,000. In fact, I'm going to have $5,000 extra that I could potentially transfer to some other investment that I have. That is why we talk about tax shelters being one of the main reasons why people invest in real estate, because it's the only investment vehicle as of the time of this video where you can really utilize it to the benefit of your tax liability. It's a great tool. So reason number 4 people love to invest in real estate is because of a concept called equity buildup. So just to illustrate what I'm talking about here, when you make your monthly house payment, let's say you borrowed $100,000 to buy this investment property. Every month when you make your mortgage payment, what you're doing is paying down the debt on that loan, which is increasing the equity that you have in that property. And the higher the equity you have, the better it is, right? So what happens with investment properties is your tenant is paying monthly rent, which is presumed enough to cover the mortgage payment. And when you make that mortgage payment every month, you're paying down the debt that you owe. Therefore, you're increasing the equity buildup, meaning your tenant is building your equity for you because it's their rent money that's building that equity. That is another powerful reason why we love to invest in real estate. All right, if you're going to continue studying for your real estate exam, I highly recommend that you watch the depreciation video right here in the box. And if you have not subscribed to the channel, please do so. Click the little circle to my left. I'd appreciate it. Comments and questions down below in the comment section. Love those. All right, guys, I'll see you in the next video.